The currency market goes dark, thus the euro is showing almost zero volatility. The situation with the pound sterling is almost the same. The only difference is that its daily fluctuation is more noticeable. However, this could be mainly explained by a higher price of the currency than by some other factors. In fact, the current market situation was caused by the lack of important macroeconomic data. This is proved by the market's reaction to the UK public sector net borrowing data. Public borrowings dropped by £21.2 billion, while economists had expected a decline of £8.3 billion. The news should be considered a positive factor since the debt burden on the state has become smaller. However, traders remember that the government debt is approaching £2.5 trillion. And at this light, the current decline in the public net borrowing is insignificant. The publication of this report is the most important event of this day. There is no wonder that the data failed to alter the market situation. What's more, today's data on the US existing home sales may also attract zero attention. For your reference, the US existing home sales are expected to decrease by 3%, which is quite a significant drop. If the predictions come true, the indicator will have been dropping for 10 months in a row. However, this data is of a secondary importance and should be taken into account only together with the new home sales figures. Meanwhile, the forecast for new home sales is not so negative. The indicator is likely to show a rise, which will offset a decline in existing home sales. On the trading charts, we see that the euro-dollar pair has been consolidating between the levels of 1.0580 and 1.0660 for the third day in a row. This points to the accumulation process. It's highly likely that the current pause will lead to a surge in speculative activity. Judging by the sequential movement within the range, the price may soon show an outgoing impulse. The key strategy is based on a breakout of either limit of the range that should be confirmed on the flow chart. The upward scenario will be considered by traders if the price consolidates above 1.0670 on the flow chart. In the event of this, the number of long positions will increase, thus allowing the price to reach a new high of the upward cycle. The downward scenario will become possible if the price settles below 1.0570 on the flow chart. In this case, the price may return to 1.05. Meanwhile, the pound-dollar pair has been trading along 1.2150, notably on the flow chart. There are a lot of dodgy candlesticks, which points to uncertainty among traders. At the same time, this could be considered an accumulation process. Thus, we may see a sharper outgoing impulse. Limits of the sideways channel are temporarily located at 1.21 and 1.2230. And traders are focused on these levels. If the price settles beyond the limit of the range on the flow chart, we will see an outgoing impulse. In the event of this, traders may receive a technical signal of a rise in the volume of short or long positions, depending on the direction of the outbreak. Traders will consider the upward scenario if the price consolidates above 1.2230 on the flow chart. In this case, traders will start opening long positions with the targets at 1.2300 and 1.2350. And the downward scenario will become possible if the price settles below 1.2100 on the flow chart. In this case, the pair may return to the psychological level of 1.20. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.